All right, good afternoon, traders. This is Christian from Hertz Tribeca and Trade Group, and it is Wednesday, February 16th. So another, what do we want to call it? Headline-driven market. I will get to the price action first things first. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So where did we finish for the day? I could actually take this off. This was from earlier in the day. S&P finishes up up 10 basis points, up 11 basis points, so 0.1%. IWM finished right around there too, and the Qs finished essentially flat for the day. The reason why I'm kind of just joking around is it's this market, it's a lot of back and forth price action. I will say this too, I've probably said this over the last couple of weeks too, but I just think that this market is just very difficult to trade right now. I think it's one of the most difficult markets to trade that I've seen in a while. I think also, of course, we got spoiled a little bit by maybe a little bit more than just a little bit, but certainly 2020, most of 2021, and we're just seeing some names get annihilated to the downside. Shopify comes to mind today, and a few other stocks that we're seeing after hours just completely get repriced. And I think that's probably a good way to describe the price action in some of these names, just getting repriced. So I wanted to talk a little bit about that. I was just making some observations this afternoon when, right around when the Fed minutes were coming out. Keep in mind that was one of the events, or one of the headlines for today was the Fed minutes. Again, I don't even think that these things should really not be moving the market that much, because the Fed minutes are from the last Fed meeting, which was January 26th. And we've probably heard from about 7 or 8 different Fed speakers from there. So it's really old news. And but in any event, from time to time, the market seems to be doing whatever the opposite of conventional wisdom is too. Remember the month prior, the last time that the Fed minutes were out too, there was a big move to the downside, which again, we're looking at information from 3 weeks ago. So it's just very odd. And if you're struggling with this market, I would say, number one, you're not alone, because I think this market is extremely difficult to trade, as I just said. And I think the only way to kind of handle that is to, control your risk. Again, this is something that I say all the time to members, and I say it in videos all the time, but can control what you can control. And realize too, which I know I said this back in January, but we're halfway through February. It's still the first part of the year. Try not to really get yourself run over in a difficult market that's really trendless for the most part right now. So I find that type of market very difficult when we're not operating in a trend. Some may find it a great market to trade. Some people did wonderful in January, scalping trades and doing very well with the volatility. I like trends. I like to rather trade, have swing trades on versus day trades, but everybody's different, right? And it doesn't, as long as you're doing what you're doing, if you're making money, keep doing it. But for me, it's a lot harder. It's a lot harder to swing trade. I think, earlier in this week, the majority of the gains that have been made this week were, on one day and on headlines that happened overnight. And then we got in yesterday and there was no movement in the S&P whatsoever for the whole day. So, and it's difficult right now to say, hey, I'm going to load up on positions for the overnight move and take them off in the beginning of the day, because we're not getting that market every day to be able to do that type of trade. And we do know over time that the majority of the gains are made in the overnight market, but this is dicey, right? And so S&P did close back above the 200-day moving average. I have basically I have some trend lines drawn in the NASDAQ. I don't have them drawn in the S&P. I could probably draw that out at this point to say that this is some type of like wedge pattern that's going on. But for now, 200-day moving average, we're below the 20-day moving average. We're below the 50-day moving average. So we're just consolidating and exploring. Right now, we're exploring the range of this pattern. The one thing that I thought was somewhat positive, but we're just not able to really go much further than that, is I've been talking about for the last couple of days that once we hit this bottom of value for the week, it's a sticking point, right? So 44.62.5, and you could see we're kind of fading this move into here, kind of like this happened in the overnight market at 3 o'clock in the morning. We got into the value area and right back out. So to me, when you see this, so what the conclusion of looking at this is that you just have to be patient with this market. You can't force it, right? And you can't throw on thinking like, hey, if I add more trades, I'm going to do better in this environment. I think it's the less trades is better when we're going like this. You could also see market breadth in the bottom of my screen. Right? It's an indicator that I use just to kind of associate volume with the advancers and the decliners. But if you look at the numbers for the day, you've got for the Dow 13 advancers and 17 decliners, for S&P 300 advancers, 200 decliners, and then the NASDAQ, also like kind of right down the middle too, almost 1,400 advancers and same decliners. So you really have to be good picking stocks right now, and you could easily be on the wrong side of picking, even if you're operating, which I talked about on Friday, a long short book. If you're on the wrong side of that's painful as well. All right. So I wanted to talk. So while this is a very choppy tape, headline driven, we've got two things going on. We've got possible, conflict that may be going on with Russia and Ukraine. We don't know how that's going to resolve itself. We know that it may be present in the headlines for a while. We also are still waiting on the Fed to actually do something. And it's just going, in my opinion, it's going to be painful being that we have another couple of weeks before the Fed meeting. So, it's just another overhang on the market. And we just keep getting more and more of these Fed speakers saying conflicting things. And some of them are on the same page. I just wish that there was more of a uniform response to what they were doing. I really don't understand, like when they get together, are they like, hey, yeah, you did a good job at disrupting the market, really good job. And then the next one's like, hey, I'm going to see what I could do tomorrow to disrupt the market. I just don't understand their end game. Of course, I'm going to be opinionated with this, but what are they doing to mix up the market? I mean, there could be and I've talked about this too before, there could be such so much of a more clear path about what they're going to do. Just say that you're going to raise interest rates 25 basis points and you're going to do it every meeting thereafter, or whatever it is, 10 basis points, and stop with we could do 50, we could do 7. I mean, you're just causing more. And that's is also, the conclusion is that the market is just going back and forth, back and forth, back and forth, because people don't know how to position for this, right? So we've got this next Fed meeting, be this week. It's 3/16, right? So I don't know. It may be time to like put the skis on, if you're around some place where you can ski, maybe skiing for half the day on the, until this happens. I was talking about that, just some things to say, to keep your mind on some other things, because this price action is very, very difficult. All right. Here's NASDAQ. We are in value, but again, haven't really gone too far. Every time that something moves, it's almost as if you have to take profits in it. All right. Again, what I try to do in these videos is kind of give you a sense of what is trending, right? We talked about the travel names. Some of these names are just continuing to work pretty well. Marriott made a new high, up 1% for the day, so continuing to trend. Some of the pharma names are continuing to act pretty well. AbbVie made a new high. I sold out of my position today at 147. A couple other things too. You look at Alcoa, which is just continuing to trend. I'm not in this one. I wish I was. It's been one of my favorite ones. I know it's the market leader. Usually I'm all over that, but for whatever reason, just haven't been able to kind of get back involved in this name. I have traded it before, but and then Devon is another one. They rolled some options in April. Pretty big order. So someone's still very bullish at this. Still hasn't been able to kind of take that next leg higher. It's really gone sideways for about. You're looking at almost a month where this has gone sideways. So I would watch for this to go higher. That was one of the things that I was noticing too. After the Fed minutes, you looked at some of these names, and they're just acting like momentum names, like higher momentum names. So energy continues to be strong. Dips are getting bought in energy. We had a dip earlier this week when, we heard about possibly the escalation going down, Russia, Ukraine. So energy names went down, and then that dip got bought pretty quickly, and OIH is out to new highs. I like this ETF. Schlumberger and Halliburton are acting very well, and they're a decent portion of this ETF. One other area to talk about too is gold. Gold has been kind of hanging in here at the highs, and I think that gold it definitely has a chance, and I'm now positioned long. I put this in the TTG trend portfolio. I got long Newmont on Friday. I've only taken one target with that, but here's what gold looks like. And again, from a technical aspect, it's coming out of the coil, right? My trades today, again, I show you this. Some are working, some are not. Dow, very close to breaking out. It did not close. It has not closed above value. The level is 62.75. So I'm a little bit early with this on the weekly chart, but it is above value on the daily. Again, it didn't close where I wanted it to close. Again, chasing in this market is just not working, but it did close above value. The name that I talked about yesterday, I bailed on this name. My stop was 280, went a little bit below that. I'm happy to get back involved in Zscaler again, but I got to see it get above this downtrend line. And I don't know, it could be waiting for earnings, or this could be the place where it fails. All right, so that's Zscaler. That's a name that I talked about yesterday. Again, I'm very tight with some of these stops, perhaps too tight on some of these stops. Docs is a name that I tried too. I've been watching this name over the last week. It popped on earnings. Logical place for this to, back into the 5-period moving average, declining volume on the pullback, although today didn't have much volume to it. But, normally this is a good spot, right? We'll just have to see if it holds. If not, if it starts to kind of break into this gap, I'll be out of that one. But again, I'm still trying trades. I'm here while I'm here and not skiing. You will see me trade and try trades. LPL, I got my first target in this one. I talked about this, similar type concept, right? Big move on earnings, a little bit of a dip back in here and moving back up. A couple other names that I'm watching, no position in this, but I'm watching ENPH. Another name that filled the whole earnings gap. Really strong earnings, went all the way up to about 178 or so, 180, and moved back to all the way back to 154. So no position, but I'm interested. I'm interested in that. All right, and I took off a couple other small pieces of names. PXD, I hit several targets. It reported earnings after the close. I'm not going to mess with the name that reports earnings. And then CEIX too. Just got back, I think, to around my cost, trailing stop on that one. So I took that one off for now. Again, just trying to stay as lean and mean as possible. If I add a couple new trades on, I'm going to take a couple trades off. This is not a market, in my opinion, to load up on positions. So I'm playing this move. I wanted to mention this one concept. If you don't want to listen to this whole video, that's fine. But I just find it very interesting what's going on with some of these names and these breakdowns, like we're seeing. Some of the names, and you could go. There's more and more that are coming up like this that are just broken the trend, right? So I wanted to talk about a concept because I continue to see people post charts of these things and saying, hey, this is a great setup, or something like that. When names, so I'm very much a trend trader, right? And I stick with the trend for as long as it's a trend. But when it's not a trend anymore, so for example, I've talked about this name before. This was a name that I traded over and over and over in here, right? Because it was so methodical. Whenever it came into the 50-day moving average, except for a couple situations in here, it bounced on the 50-day moving average over and over and over. But once it breaks trend, the trade is over. And I'm speaking generally because not every situation is going to be the same. But I remember, and I talked about this example in the trading room. I'm gonna talk about it again here. If I can bring this screen over. There we go. So this is a long-term chart of Cisco, right? And if some of you may have traded that time, many of you probably didn't, right? And there's a lot of newer traders that are out there. I remember, this is when I started my career, right? And Cisco was the darling, right? Was the darling of the .com, what it was referred to as the .com bubble. This thing, and I remember I was a new trader. I didn't know any better, right? And after this thing started to decline, right? And it went from, it went parabolic to the upside, like we saw many trades, many stocks do over the last couple of years, $5, $10 to $20 to $30 to 40, 50, 60, right? And this is split adjusted. So they kept on having stock splits with this stock too. But notice what happened here. And this is why I try to educate traders to say, when you're buying the dip and thinking that you're going to get a great buy in things like a C Limited or a Facebook or a PayPal, take a look at the time. So it's nice, it's good to reference these things to notice how they worked, right? When Cisco topped out at $60, right, and fell all the way down to 10, you may have thought, hey, this is a great buy, right? It was trading at $60 a few months ago. Take a look at the time that it took to get back to its highs, right? And this is a name that just reported after the close, right? That was when it made this low, right, back in 2001, 2002, right? It took 20 years for this to get back to its highs. Now, you may have that time frame, right? You may have a time frame of 20 years and you're okay with that, right? But also, if you bought it on the dip, maybe you didn't time it perfectly on the low, right? And you bought it somewhere in here, right? You didn't recoup your back to your cost basis again for 10 to 15 years. Is that something that you want to be sitting with? And I'm not saying like these names aren't going to come back in a couple of years, but this generally is sometimes how it does work. It takes years upon years upon years. And this is a good one. There was many stocks like a Nortel or something like that didn't make it, right? This is a survivor of the situation. So now you may have said too, like, okay, hey, I bought it in here. Hey, I got a winning trade, right? I held from $10 and I got it to 30 or 40 in 15 years. Wow, you won, right? That's awesome. Well, if you would have gotten out of instead of dealing with this nonsense and trying to buy the dip, right? If you would have just said, hey, I'm going to take my money, if you got stopped out for a reasonable, a small loss, not a big loss, and you moved your money into the S&P, right? And you did this back in 2002 or somewhere in here, this is the opportunity cost. So by messing around with thinking that you're going to get a cheap price in something, in my opinion, just isn't the way to trade. It's, and again, I think I hear this all the time where, hey, I've got a long time horizon. Do you really want to be sitting in a stock for 15 years to get your money back? Wouldn't you rather be making money like this? Right? Where you could have quadrupled your money even more by just messing, just by going in the S&P, right? So I would really think about this. If that's what you think that you're doing, that you think that in some of these names that you're getting a really good deal, look at some of these stocks over time. Some of them they do come back, but there's a lot of them, right, that take years upon years, and some of them never come back, right? So you're not only losing the time by sitting in some stock that hasn't finished going down, but you could be missing out on stocks that are trending higher, right? You have to weigh the opportunity cost as well, right? So going back to this stuff, right? And it's one of the things that I've done correctly. I mentioned that I did not have a good January, but I'm not involved in any of these names. They're broken, right? They're not cheap. They're cheap relative to where they were a couple months ago, but they've broken the trend, right? And to think that you're going to find the bottom in a PayPal, and then what happens? Let's say you do. Let's say 110 is the bottom. Where do you think it's going to go, right? The last time people were telling me here, like, what a great buy this was in here. Well, where did you sell it? Right? Even if you caught this bottom perfectly, you got out, like, you're buying it to get in at 185 and then sell it at 190. It's too much risk, because if you stayed in this thing too long, the stock's down $90 from there, right? So I don't think people are recognizing, and the reason why I'm going into detail in this is, staying in names that are in uptrends and having a stop price is so much better than getting yourself into this. Because I know people were getting involved in this, a month or so ago, and I was like, you got to be kidding me, right? It's not done going down, right? It's giving you, since this thing has broken, right, it is giving you no technical buy signal whatsoever, right? It's, first of all, it's the 200-day moving average is something that I use to tell me if something is in an uptrend or downtrend. And that's why where we are is an important, where the overall market is right now is important, right? And if you're not using the 200-day moving average, use the 50-day moving average. This stock, since this is broken the 200-day moving average, has not been able to reclaim the 50-day moving average once. For a small time, it was able to reclaim the 20-day moving average. So if you were buying it here because it got over the 20 and you were going to use it as a stop, then you probably had a paper loss, small, if you were disciplined, not a big deal in here. But if you're trading other than that, just on feel or just on your instinct, without looking at the trend and not realizing what's going on here, you're going to have a painful year, in my opinion. All right. So of course, everything that I'm talking about here is just for information. I'm speaking very generally. I don't have a crystal ball. I don't know what's going to happen with these stocks, but I've seen it before. I've seen it before play out. These names can take years to recover, like a Cisco. And take a look, study a Cisco, or study even, stocks that for a while, that were down. They usually end up having to base for a number of years before they come back and they turn around. Look at what's going on with BABA as well. Do you think this is done going down? It may, but there's no buy signal here in BABA. What is telling you that this is a great stock, right? Or that this is a stock to own? It has not even been able to get like above its value area. And it's something that I'm monitoring. I'm monitoring the Chinese internet names, but I've got no position in them because they're not providing any buy signal. Maybe a move over the 50-day moving average, but still, I mean, they're really dicey. It could take a number of years for them to come back, and they were the first ones to come in. I would think this needs to go sideways for a while. So in any event, I'll be continuing to monitor some of these things. Maybe they'll go up before the US names will. We'll see, to be determined. All right, guys, have a great, I think that's enough for one night's video. Have a great night, everybody. See you tomorrow.